Okay guys, welcome. This is Jeff here with MindShift, and today's presentation we're going to be talking about intraday zone flips and precision entries. Okay, so last week's lesson we talked about higher time frame trading zone flips in the higher time frames with entries on, say like the weekly or the daily, H4, things like that. Today we're going to be talking more about specifically intraday setups. Okay, so I'm going to be showing you how to take entries on the H1 and then more precision entries on the M15 chart. Okay, so depending on if you're an intraday trader that likes to trade every day or likes to take your setups, on a day-by-day basis, you're going to be looking at your M15 for your entries and more precision setups. If you like to take your time with your trades, you can still trade intraday on the H1 chart. Okay, you're just going to let the trades play out a little bit longer, maybe 1 or 2 days in time, maybe have some trades carry over, and but you're still basically trading on an intraday basis. Okay, this is more like a short-term trading basis. All right, so I'm going to show you both examples today. So how do we find the intraday setup? Okay, what we want to do is we want to determine the higher time frame bias on the daily chart. Okay, and we do that by finding a bullish or bearish confirmation with our 3-bar pattern. All right, and then once we figure out which direction to trade, we can find the entry on the H1 or the M15 chart, just like I've explained. Okay, but the precision entries are going to be on the M15, and you're going to see that on the chart examples today, sometimes with very low or no drawdown at all. All right, so we were looking for a market structure shift or a break, which means in bullish bias conditions, we want to look for relatively equal highs to be traded through aggressively, and then watch for price to retrace back to that level that was broken. Okay, and conversely, in bearish bias conditions, we want to look for relatively equal lows to be traded through aggressively, and then we want to watch for price to retrace back to that level that was broken. Okay, so what do we look for when we take an entry? In a bullish bias condition, we want to look for price to be trading higher, right? So we want to see an aggressive shift through what retail is going to perceive as a strong resistance, i.e. equal highs or relatively equal highs. We will be looking for a buy entry when the price retraces back to that level of previous resistance. You look for a swing high formation that was created just prior to that shift through, and then you're going to find the highest candle, including the wick in that candle. The range of that candle will be your entry. In a bearish bias condition, we're going to look for just the opposite, right? We want price to be trading lower. Okay, so we want to see an aggressive shift through what retail would conceive as a strong support level, okay, or equal lows or relatively equal lows, right? And then we would be looking for a sell entry when the price comes back to that level of previous support. Same thing, we would look for a swing low formation that was created just prior to that shift, and then find the lowest candle, including the wick, and the range of that candle is going to be your entry. Okay, and you're going to expect the setup to form during session open times. Okay, this is very important. London session, the London open hours, 2 a.m. to 5 a.m. Eastern, that 3-hour block of time. Okay, and then New York session, New York open, 7 a.m. to 10 a.m. Eastern. That also a 3-hour block of time. So you're looking specifically for your setup to form within this 3-hour block of time in either London session or New York session. Okay. So let's take a look at some chart examples to see what that looks like, and then you guys have a better understanding of what I'm talking about. Okay, so take a look here. We have a GBP USD D1 chart. We're going to figure out if this is a bearish bias for us, which you can see in the title, right? So we're looking at this 3-bar pattern, this 3-bar candle pattern for our swing high. Okay, this is what's going to give us our bias in this example. Okay, so this is a swing high that we're looking for. And so you can see here that this high and this high and this high, these two highs, there's a lower high to the left and a lower high to the right. Okay, and this is our swing high. So what we're looking for in the 4th candle is this to trade through the 3rd candle's low, which it does right here. Okay, that occurs here after the 24th of January. And so this next candle, we can look for a bearish bias condition. We can look it to be a seller. Okay. So looking at a 1-hour chart based on that example, okay, this is H1 chart. This is where we said that we were looking for bearish bias conditions after this line, right? So once we see that we have our bias and we're looking for a bearish or short setup, then immediately your eyes should be searching for what? we're looking for equal lows. Okay, so where do you see equal lows after this line? Your eye should go basically right over here, right? And we can see low that's formed here, and then this low and this low relatively the same right here, right? So these are equal lows, and then you can see that price shifts rather aggressively through those lows here, okay? And then what happens? Price retraces, okay, back up to that level. All right, so then we look for the swing low prior to the shift downward, okay, which is right here. Okay, you have a candle here, here, and here. Then we're going to take this candle's range, including the wick, and that range is going to be where you're looking for your entry. Okay, anywhere from that whole range can be where price retraces to. You can see price actually retraced exactly to the middle here, which is nice. Okay, and then you're going to be looking to take an entry when price returns to this range. Now, when you do that, your stop loss is going to be above the high prior to the shift down, okay, which is right here. This is where they aggressively moved away from this area. So this is where your stop is likely not going to get hit, right? They're probably likely not going to come back to this area if they're going to move so fast away from it. Then price is going to retrace back up to the zone flip level. And that's where you're going to take your entry, okay, and your stop loss goes right up here. Okay, so if we were to frame that setup here, this is your entry, this is your stop loss, okay? That would be what you're risking, okay? Your potential TP reward will be down here. You can see the price has actually gone all the way down here. Now, this is obviously the potential. That's not saying that you might not catch the entire range, okay? But if you were to frame this out, this is a 3-to-1 risk reward ratio setup, okay? Now this is because it's on an hourly chart, right? And you're looking at probably holding this for a few days, okay, based on the hourly entry. All right, so this is more like a short-term intraday short swing setup, all right? But if you're looking for more precision and more of an intraday where you're taking a trade setup on, the same day and exiting the same day, you're going to look down to the M15 chart and look for more precise entries. And this is what I'm going to show you on the next slide right here. Okay, so we're going to take the exact same setup. We're going to look at this on an M15 chart, and we're going to set up the same examples here, but we're going to see if we can get some better entries, okay, and more precision entries. Okay, so this is the same GBP USD chart. However, this is an M15 chart. Okay, so we're looking for bearish bias, okay, and or looking for bearish setups. We have a bearish bias. So what should we be looking for? We're looking for some equal lows, right? So immediately you should see on the chart here, this is where we would see the first set of equal lows. Okay, we have a low here, a low here, a low here, and a low here, all relatively equal around this area. Okay, and then after that, subsequently, we have price shifting down aggressively away and taking out that whole level right here. Okay, and then what happens? Price is going to come back and retrace, okay, to the same level. Okay, now note on your chart that this is where our blue tracer is. Okay, so these equal lows is actually yesterday's low, right? You can see here this relatively equal low here. The blue tracer marks that for you. Okay, and you can see price after shifting away from that area comes right back to that level. Okay, right back to the equal lows, right back to the blue tracer. Okay, so that's significant. Now we're going to look for the swing low prior to the shift down, which is right here. Okay, so we're going to take that candle's range, okay, and that is going to be where potentially your entry is. Okay, now because this entry here is after New York session into the middle of the session, it's kind of late in the day. Now you could take this entry here, okay, and it would give you a small short scalp, and you could hold that entry out into the next day. Okay, or you could wait for the setup to happen the following day because you're looking for the same conditions, right? And you can see here that price, even though it comes down away in Asia session, it comes right back to it right here, and it comes right back to it again over here. Okay, now what's significant about this area and this area is that it's our time of day, right? It's our London open and New York open times. Okay, these are the shadow boxes that paint. Okay, when we're looking for our window of opportunity to take the trade, look how the price comes back up to those highs again at exactly those times. Okay, so that's what I mean when I say that your setup should form within that window of time, that 3-hour block of time. You should be looking for your setup. So you can take a short here. You can also take a short here once price comes back and retraces to that zone. Okay, so we're gonna take this entry here, right? Because this is where price returns to the range that we've marked off. We might have missed it here, okay? But you can see price trades right back to it and then trades aggressively away from it. Okay, our stop loss is going to go above previous day's high, which is right here denoted by the blue tracer. Okay, or it could even go above this high. It's okay, but basically the point is that you don't want to see it come back over the highs that was created yesterday, right? So you want to see price move aggressively away from higher prices. We want to go lower because we have a bearish bias. Okay, so that's where your stop loss would go. And if we frame that as a setup, so we have our entry here, and we have our stop loss up here, and we have a potential of this range for our take profit. Okay, now that's going to give us a 3-to-1 risk to reward ratio, and it's a very nice trade. Okay, but we're not done yet, right? On this chart, you can actually see a couple of things here. I want you to note a couple things, that what's actually being created between yesterday's low, okay, and today's low. What do you see happening right here? We have another set of equal lows, right? And this blue tracer right here, you can see that denotes yesterday's low, comes right down into it in the same time that it creates the highs and the entries for us set up here in London and New York. It's also creating lows, equal lows in London and New York. Okay, so if you weren't clear on the bias and you didn't know which direction to trade, you might have gotten caught taking this W, okay, long, right? And that's why they put those in there for you, to get you kind of caught up and messed up trading in the wrong direction. Okay, but if you know the outlying bias and you know which direction you should be trading, then you're not going to get caught in this trap. You're going to know which direction to trade. Okay, so now we have equal lows, okay, made from yesterday to today. All right, what do you think they're doing by making equal lows like that? They want to trap more buyers to go long, right? They want people to think that this is still going up, so that they can take those stops away from them when they place them under here. Okay, so there's our equal lows made from yesterday to the current day, right? And then price trades aggressively away from it, okay, and takes out those lows. All right, so this is our setup that we took short, okay, and while this setup is playing out, it's a new setup that's forming, okay, and already setting up for us into the next day, right? So as price comes back up to that level right there, okay, we're going to take the swing low prior to the shift down, which is right here, okay, and we're going to take that candle's range and we're going to draw it out in time over to the next day. And that you can see here is after the Asian session in London, okay, London open, we create a nice little M here that stabs right into our trading range right here in our zone flip entry on the next day. Okay, and so we would look to take our entry once price retraces back into this level right here. Okay, your stop loss is going to go obviously right above this high up here. Okay, or you can even just put it above the 50 figure or the 200 EMA. Okay, those are also fine areas. Basically, you just don't want price to come back up and spike up to this high here, right? We don't want to see that happen. So once this trades away, all right, we frame that setup. We have our stop loss above the 200 EMA right here. Okay, that's our entry. And then we have a potential of this down here as our take profit. We have a nice 5-to-1 risk reward ratio trade setup. Okay, so in conjunction with yesterday's setup here, which we had a 3-to-1, okay, a 3-to-1 and a 5-to-1, okay, gives us a risk to reward of 8. Okay, so in contrast to, well, we only had a 3-to-1 on the H1 setup, okay, and waiting many days for that to play out. Okay, on the 15-minute chart, if you're trading intraday, you can find more precision entries and more setups in between. Okay, let's take a look at another example. So this is Euro USD, okay, a D1 bearish bias. We're going to be looking at this set of 3 candles right here. 1, 2, 3, that's our swing high right there. So we want the fourth candle's low to trade below the third candle's low, which it does on this candle right here. And then we're going to be looking to be a seller after that. Okay, so if you look on here, we have the beginning of February, looking for bearish conditions and sell setups. Okay, so here's the beginning of February, right? We're looking at a nice downtrend here. So where should your eyes be looking? You want to be looking for equal lows, right? So on our H1 entry, we want to find equal lows first. Where do we see that? Right here, right? We got a low here, we got a low here, and a low here, right? Relatively equal lows. Price trades aggressively through right here on this shift, okay? And takes those lows out. And then what happens? Price retraces back up into that zone right there, okay? And then we look for the swing low prior to the shift down, which is right here. Oh, sorry, right here. Okay, and we take that candle and we take that range, okay? And once price comes back up into it, okay, we can take an entry. So we could take an entry here. There's also a little bit of a poke right there when it comes back up. There's also an opportunity. So if you missed that first one, you could take one right here, right? So you take your entry. Once price returns back to this range, your stop loss is going to go above the previous high that was prior to that big shift, okay? Because you don't want to see price come back to that level. And it's very unlikely that they would come back there if they've moved away so aggressively, right? So your stop is going to go above that level right there. And if we frame that setup here, we have a entry either here or here, okay, with a stop above the highs there. So there's your risk, okay, and this is your potential take profit. All right, now that is going to give you a 6-to-1 risk to reward ratio, a very nice setup on this setup here on EU. All right, and same thing, we're going to look at this is an H1 entry. Obviously, we're waiting many days for this to play out. But if you're looking on a more precision scale and you want to look at an intraday precision setups, we can look at an M15 chart and see if we can find the same setups or even more. Okay, so this is Euro USD on the M15. We have a bearish bias condition, right? So we're looking for equal lows, okay? And where do we see equal lows? We see a set right there. Okay, we also see a set up here first, but let's look at this one first. And we have equal lows here with price shifting aggressively through right here, right? And then price is going to trade back up into that zone. Okay, and then we're going to look for the swing low prior to the shift down and take that candle's range, and that would be where you want to see price come back to, and you would take an entry. Okay, where does the entry form? Right here at New York Open. Okay, it doesn't get up there in London, okay, so you don't take it there in London, but it does get up there in New York, right? That's why the timing and the session open times are crucial. That's where you want to see the setup form, okay, right at the box, which is very nice. Okay, you take that entry there. Stop loss is going to go right above the Asia high, okay, and then if we're going to frame that setup, so we have entry there, stop loss there, here's your risk, okay, and potentially there's your take profit, right, to the end of the day. 2-to-1 risk reward ratio, not as high as before, obviously, but you got to remember that this is EU with a very small ADR range. So if you're looking at pairs with a small ADR range, you're probably looking at a little bit smaller risk to reward ratios, which is, you know, understandable. Okay, so 2-to-1 risk reward ratio on that, which is still not bad, right? You're making a nice anything 1-to-1 or better is going to be an ideal setup. Okay, so let's keep going, right? Because we see more entries that we could take on this chart. So now we have this low created, and then this low that comes out at the end of the day, which we form another set of equal lows right here, right? And then going into Asia here. Okay, so we have equal lows, all right? Price trades aggressively through those lows right here. Here's London where it creates the low, okay? Then it comes back up in London, okay? our range is going to be right here, this swing low candle right here. Okay, it doesn't quite reach in London there, but it does right here, right? Just the right afterwards. This is still within our window, okay, our London open window. So we can take the entry right there. So our stop loss goes above the Asia box high. Our entry's on that candle right there, okay, right after the spike up, and coincidentally it hits the 50 EMA as well. And then this is our potential risk, our take profit level at the end of the day, right? So we're looking at a 3-to-1 risk reward ratio there. Okay, so it's a little bit better than the other one. We got a 2-to-1 there, 3-to-1 here. All right, can we stop there or can we keep going? Obviously we can keep going, right? Because we have another setup that I can see right below here, right? We got a nice set of equal lows right below here that forms at the end of the day. Okay, price trades aggressively through and takes out those lows. Now this is going to be a little tricky to catch because it's a fast move, right? But if you look and see right here, the swing low that's formed prior to the shift down is right here. That candle's range, okay, is actually the Asia low range, right? I drew the box out a little bit bigger, but that range right there is what you're looking at right there, okay? And you're looking for price to come back right back up into that range, okay, which it does right here at what time? At London Open, right? There's a spike there, okay? And then it trades all the way down, okay, to this low here, and then comes all the way back up in New York Open, but then what? It comes right back to that range again and rejects it. Okay, so that's why I drew the whole range here actually for the whole candle, because if you look at it right here, that wick is actually the swing low prior to that shift right here. So this is the actual swing low setup, and you can see it encompasses the entire range of this London to New York Open, and it gives you 2 opportunities to enter, okay, once price retraces back up into that range. Okay, so we have a setup there. If you took the entry there, or if you took the entry there, or you could have taken 2 entries, right? And you had twice the profits in that case. Here's the potential TP target that you could reach for here in London for that London setup. In New York, it would be a little bit less because obviously New York volume is going to be lower. But if you're just basing it on this London setup here, we have a 2-to-1 risk reward ratio. Okay. So we had a 2-to-1 here, a 3-to-1 here, and a 2-to-1 here for a total of 7, okay? And which is just a little bit better than our H1, which we had a 6-to-1 risk reward, right? So it's still making out a little bit better with the M15 and the precision entries, but you're trading a lot more, right? You're trading across intraday setups, and with the H1, you're basically just waiting for many days for that setup to play out. So it's 2 different styles of trading. Obviously, one is a little bit more involved. And the other one is more so like a short-term swing trade kind of mentality. Okay. All right. One more example here. We're going to look at USD CHF, a daily bullish buy. So we're going to look at some bullish setups now. Okay. So our swing low that we're looking at for this is going to be right here. Okay. This 3-bar pattern. We want price to trade above the 3rd candle's high, which is right here, and then we can looked to be a bullish buyer, right? This is the 14th of January, so after the 14th of January in the chart, we can look for bullish setups. Okay, so here's our H1 chart, and H1 entry, we're looking at equal highs for bullish setups. Okay, so you can see the first set of equal highs there, right there on the chart. Price trades aggressively through those highs with this big shift bar right there. Okay, and then you can see price comes right back to that zone several times. Okay, and you're going to be looking for the swing high prior to the shift up, which is right here, and the candle with the wick, that's the candle that you're going to be looking at with the range. And you can see price stabs into it 3 or 4 times, giving you several opportunities to go long there. Okay, so you take your entry when the price returns to that range. Your stop loss is going to go below the low prior to the shift, right? So that's going to be right here. All right, so we frame our setup. There's our entry. There's our stop loss. So this is our risk. And our potential take profit is all the way up here at the highs. Okay, so we're looking at a 5-to-1 risk reward ratio for this setup here. Okay, so now let's look at an M15 chart and let's look for some precision entries. So here we have some equal highs. Okay, one high created here on the 15th, and then the high that's created here on the 16th. Okay, creates a nice set of highs right here. And then what happens? Price trades through those highs and takes out the highs. And then you can see price retraces back right to that zone right there. Okay, the swing high prior to the move up is right here on this candle. And once price comes back to that range, you're going to take your entry when it comes back to it. Okay, notice that it's also the blue tracer. Okay, it comes back to the blue tracer and vaults up away from that. Okay, when does this happen? New York Open. Okay, not exactly at the box. That's why we have our range, right? Because it doesn't have to always form right at the box. It's going to form sometimes before or after, right? So we have that 3-hour block of window, but we're looking for the setup to form within that block of time. Okay, so then price moves up and away, bounces up again from that range a second time, so we could have taken another entry. Okay, and then stops right about here. Okay, your stop loss is going to go below the low prior to the shift. And so here's our setup. We have our entry here, our stop loss here. This is our risk, and then we have our potential take profit up here at the highs. Now, again, another low ADR pair, all right? ADR is 51 for you, Chef, right here, okay? But you're still getting better than a 1-to-1 on this trade, so it's okay to take. And if you were able to get the second entry, you would have gotten a little bit more, right? But then we end the day in consolidation here, just at the highs, okay? But curious, what has formed now, okay, at the end of the day? What has formed again is another set of equal highs, right? So if you were in this trade and you were holding to the end of the day for your profits, you might even want to stay in the trade, right? Because you know that you see a set of equal highs being created in a bullish bias condition. You might want to just hold on to that trade and see if it does run through and give you a setup the next day as well, right? Which it does. So you can see price runs up and through those equal highs in Asia. Okay, right here, nice move up, and then price comes back down to that zone. Okay, note the blue tracer, okay, because that's also where you should be looking as well. There's your swing high and the range. Okay, you can actually see this wick is a little bit clearer on the shadow box here, but that range here, okay, when price comes back to it, you're looking for an entry. Okay, this is right before London shadow box, so this is still London open. Okay, so it's a little bit early. You might have missed it here, but if you missed that, you can take the retracement here, the pullback entry right here. Okay, and then you can take this up. London open. Your stop loss is going to go below this big figure here, 99. Okay, below the 50% range, but basically below the low here. Prior to this shift up. Okay, so that's your stop, that's your risk. Here's your potential take profit right here. Okay, and you're looking at about a 4-to-1 risk reward ratio, so much better than the one we saw yesterday. Okay, all right, let's keep going. We have one more set of equal highs that's formed right here the following day. Price trades aggressively through those highs and takes them out. Okay, and then you can see price kind of come back slowly back into the range. Okay, here we have a gap, okay, but then it comes right back up and through. Here's the swing high prior to the move up, okay, and that's the range that you're looking for price to come back to, okay. Now here's gap time. Obviously you're not going to take an entry there, okay. Here's your Asian session. If you're trading Asia, you might have been able to get in those times, but here's where you're looking for your entry to form, right? London Open. So you can see one more time it stabs right down into that range, okay. That's where you're going to take your entry. Your stop loss is going to go below the Asia box, or if you want to be safe, you can put it below the week open here where it gapped down. Okay. So there's your entry, there's your stop, and there's your potential take profit right there. And that's another 3-to-1 risk to reward ratio there. Okay, so you had a 1-to-1, a little bit better than 1-to-1 here, a 4-to-1, and a 3-to-1, so a total of 8, right? 8R for a very nice week of trades on a very low ADR pair that normally doesn't give you very many setups. Okay, so you can find some very nice setups given the right conditions if you're looking in the right places. Okay, guys, so that's going to do it for this lesson. Okay, hope that was helpful. If you guys have any questions on this whatsoever, let me know in the Telegram chats, or you can send me a message directly. All right, but hope you enjoyed that. I'll see you guys on the next lesson.